Thank you, Wyman, and thank you everyone for joining us. I think a lot of those points that Nick and our previous panelists made were very applicable to what we are seeing today, effectively across the financial industry and affecting billions of people around the world. Today's focus on current and emerging developments in the digital finance industry, as well as its surrounding ecosystem. Worldwide, we see a shift from cash to digital payments. They are continuing to engage with each other in new ways, both offline and online. As we enter endemic phase of COVID-19, market is slowly opening up and customer behaviors geared towards everything digital. Shopping online, e-commerce, and cashless payments have seen a growth and spread further across different markets. So what we also see is the rise of interest around cryptocurrencies. So the last I checked on CoinGecko, the global cryptocurrency market cap is $2.42 trillion. And they are tracking 9,612 cryptocurrencies. So let's start by getting into who's on the panel today. I'm so honored to be sharing this panel with the amazing lineup of speakers: Anthony Gajor, Managing Director from Fintech Bank Labuan and Hamilton Reserve Bank; Anson Zeall, Chair, International Digital Asset Exchange Association; and Pooja Sinha, Associate Director from Forte Law. Anthony, I want to start with you, right? So I love the idea of new players in the marketplace. People are too polarized with the fiat versus crypto. So perhaps the true stable coin to bridge that gap can help more people get introduced to this idea in the long run. And as an example, right? So the taglines that caught me on the fibank.com or feebank.com?
Fibank.
Fibank, okay. Or Fintech
Yes.
Bank is
Yes.
bridging the worlds of digital and traditional fiat currencies. Can you take us for a quick tour of the Fintech Bank and Hamilton Reserve Bank? And what is the vision?
Thank you, Karen. Hello, everyone, and greetings from Nevis. I am also extremely delighted to be a part of the panel with everyone here today. And thank you to the Labuan IBFC for inviting me to speak on behalf of Fintech Bank Limited and Hamilton Reserve Bank. So allow me to introduce Fintech Bank Limited and Hamilton Reserve Bank. Fintech Bank Limited is a fully licensed and regulated bank based in Labuan, Malaysia, while Hamilton Reserve Bank is based in Nevis, St. Kitts and Nevis, which is also the hometown of one of America's founding fathers, Alexander Hamilton. Fintech Bank and Hamilton Reserve Bank offer global banking solutions to customers from around the world. We have customer relationships in over 150 countries worldwide and accept customer deposits in 10 different currencies. Both banks have a strict no customer lending policy. As a result, our customers benefit from anytime liquidity as well as the highest level of deposit safety. Now, Fintech Bank focuses also on serving customers in the digital asset industry. So we have partnered with some of the largest crypto exchanges, digital asset exchanges around the world, primarily in Malaysia, some of them being based in Malaysia as well, to allow our customers that are in the digital asset space to transact freely in both worlds. So they may need to make global payments. Fantastic. We transact 100% via SWIFT wire transfers. This is something that is seamless for them. They may also would like to purchase digital assets, or they would like to liquidate. We are that one-stop solution assisting them to do both. So Hamilton Reserve Bank, while is headquartered in Nevis, as mentioned, we focus more on private banking. So our clientele is a bit different. However, as you can anticipate, we do have customers that are interested in the digital asset industry as well. So we may make introductions as necessary. Some of those customers in the end may be mutual customers. A Hamilton Reserve Bank customer may also have an account at Fintech Bank Limited. So what we also pride ourselves on is what specifically is being able to onboard customers efficiently. So Fintech Bank and Hamilton Reserve Bank have partnered with Temenos, which is the world's largest core banking solution provider. With the Temenos system, we're able to onboard customers from anywhere in the world remotely in a matter of minutes. So an individual can simply visit our website at hrbank.com. For example, once they have a copy of their passport, they have the necessary supporting documents, within a matter of minutes, they can onboard successfully and become a customer of the bank. So fast global payments, efficient customer onboarding, as well as digital asset solutions is what Fintech Bank is able to provide to all of our customers.
That's great. What is the vision, Anthony, for these two banks?
For these two banks, great question, Karen. The vision in the end is to become one of the largest global banks, assisting, providing solutions for customers that are really heavily invested in the digital asset world, and also those that are seeking fast global payments. So as highlighted on our website, really being the bridge for both worlds. So we're actively working towards that. All of our investments into the Temenos software, for example, is a symbol of our efforts as we try to really bring both worlds together. So we do believe that both currencies can coexist. I mean, currently they both are being used on a daily basis by everyone, and the use will only increase. More persons will be heavily invested in digital assets, and they will need that digital asset settlement solution, where Fintech Bank comes in. You mentioned the market now is about $2 trillion. Although the market is $2 trillion, both retail sense that there is still a bit of fear, so to speak, as it relates to the liquidity in the market. How easy is it to convert my digital assets into fiat currency? How fast can I get that done? These are questions that our customers have. These are solutions that our customers are looking for. Now, there are a lot of industry players in the digital asset world. There are a lot of banks out there in the world. However, there is a friction. There is a friction as it relates to them being connected and being able to settle efficiently to satisfy the end user. Fintech Bank, the vision for Fintech Bank is to be, again, that number one player in that space, making it easy, making it seamless for our customers.
Great, thank you. So you said it right. At the end of the day, the most important thing for customers is the liquidity of any asset. Thank you, Anthony. Pooja, please introduce yourself and the company and what you're doing. And then after that, one of the utility coins like stable coins, right, work to minimize the volatility of the price of a cryptocurrency. So by pegging them to a specific exchange rate for a currency, crypto, fiat money, or an exchange traded commodity. How developed is the stable coin regulatory landscape in this part of the world?
Right. Sure, Karen. So firstly, to introduce myself, my name is Pooja Sinha. I'm an international lawyer based at a Singapore law firm in Singapore. And my practice is about 50% traditional, still helping bond issuers in Indonesia and elsewhere, doing very traditional things at the same time, doing lots of funky things in the digital space as well. Difficult to be in Singapore and not be involved in the digital space. In terms of your question, is the stablecoin regulatory regime developed? I would break that down into two parts. So to my mind, being developed means two things. Firstly, is there a definitive regulatory characterization of what a stablecoin is? Where does it fall within the fault lines of commodity versus token versus other kinds of investment products? And also the second part of it is whether there's actually an understanding across jurisdictions as to that characterization, because that's obviously very key given the cross-border nature of stablecoins and indeed any digital product. Now, the answer, which I suspect we all already know, is that it's not clear, and that's for a number of reasons. So it's therefore, to answer your specific question, I would say the regime is not that developed. So I think that's because there are a number of issues that are thrown up. So I think let's just take one example. In Singapore, the financial services regulator, the MAS, I think very wisely sort of did an industry consultation on how to characterize stablecoins. The question that was considered was, should it be characterized as e-money or should it be characterized as a digital payment token? And that has very different implications, because e-money from a Singapore perspective is seen as a representation of fiat currency. So there's not just AML CFT obligations, but they're more bank-like obligations. There's more requirements for safeguard user money, minimum float, all of that. So that's kind of more akin to a bank-like model of regulation, which seems to be what the US is moving towards adopting as well. I think once the US actually decides on what regulatory approach it wants to follow. And I think Anthony's presentation was particularly interesting because they've kind of embraced the bank model full scale, even though many in the libertarian blockchain space sort of see all that regulation as anathema to the existence of to why the industry came into being in the first place. And then on the other side, from a Singapore perspective, you have digital payment tokens, where from a Singapore perspective, the main risk that is seen is the AML CFT risk rather than kind of the user risk. So that question is still out there. However, one of the Singapore incorporated issues that did come out with its stablecoin was finally regulated as issuing e-money under the Payment Services Act. So I think it's going to be very interesting to see sort of how that develops in Singapore. What I will say generally is that obviously they're very divergent views on regulation of this industry. It's kind of the classic libertarian versus non-libertarian divide. But I think as this industry grows, I think everybody understands it needs to be regulated. I think the path to regulation is not going to be easy. There are many, many challenges there. Industry associations, of course, have a great role to play, and I'm sure Anson will comment on that as well. But I think just to give you a flavor of some of the issues, I think, if you look at even things like utility tokens, even 4 years after the ICO boom, there's still no agreement on is a utility token a security token or not. Then if you look at CBDCs and CBDTs, we actually go to very fundamental issues such as, does the monetary law in each country actually permit the issue of currency in the form of a digital token when the law actually only referred to banknotes, because that's all that we knew then. So I think, there's many of those kind of issues coming up. And of course, legal harmonization is another sort of, behemoth unto itself. So it'll be a while until we get there, but certainly that's where we are headed.
Okay. Do you have a question for Anthony after hearing what he said?
Yes, actually. So, like I said, classic, you're kind of living the classic debate between the libertarians and the non-libertarians. What's your sort of take on regulation in this industry, and what are you seeing as sort of the hot regulatory topics in this industry on the ground?
Thank you, Pooja. Great question. What we see as some of the hot regulatory discussions on the ground really is how are we able to efficiently and successfully best identify who our customers are and what is their business activity, what are they involved in, what is the source of funds. What measures does the bank have in place to mitigate risks? What internal protocols do we have to ensure that we know our customers as best as possibly can, and that we are able to identify the source of funds? So we have invested quite a bit in technology to really achieve this. Thus, our investment into the Temenos platform. But that is what we really see the regulators, from our experience, regulators really have as a pressing issue. Hey, Fintech Bank, hey, HRB, how are you able to identify where your customers are from? What are they doing for a living? So as it relates to AML, KYC, CFT, how are regulations enhanced there for banks and as well as other digital asset players that's what we really see right now.
Right. Thanks, Anthony. That's very helpful. It's interesting because I think what you're saying is that it's really sort of a focus on the traditional risks that a bank would have. And I think that's one of the larger points I wanted to make, which is that, separate from the regulatory issues, which is of course a big issue in the digital asset space, I think what's often missed out is the sort of plain and simple traditional law issues, such as data privacy, data protection. How does that apply to the platform? Of course, difficult to implement. A lot of compliance in this space, but privacy law applies whether you like it or not. I think the other big issue that often tends to get ignored is just managing legal risk through contracts. Of course, this is the big decentralized universe, but there's a lot of simple contractual tools that you could use to manage your risk. And there's just some very simple trip ups that I've seen in documents. For example, if there are crypto transactions between individuals, are you considering cryptocurrency as property, or is it just a medium of payment? Because if it all goes pear-shaped, are you supposed to actually give that same amount of crypto back, or are you just supposed to give the market value of the crypto at the time you give it back? And there could be a big difference between the two, as we know from the way market moves. So these are, again, small things that can be addressed and should be addressed, and can be addressed quite easily, in addition to the big picture regulatory issues.
Oh dear, that could be like wrong place, wrong time. Thank you, Pooja and Anthony. Hi, Anson. So one of the biggest challenges when launching new product or acquiring new customers' behaviors is the duration it takes for something new to stick, right? So the two major events in the world where we see new regulations implemented, in my opinion, are 9/11 and COVID-19. So the adoption rate for digitalization, especially in the MSME and SME, is encouraging, to put it positively. But 9/11, however, has changed the financial world with the enhancement of the AML and then the Terrorist Financing Act. And this has affected not just the mainstream, but the virtual assets players as well. So with what's happening with one of the prominent exchanges, right, getting banned in a few key markets, we want to see the crypto and digital asset sector build on a unison platform for the industry and regulators to scale up their engagement, to ensure the sector thrives and deliver great products and services to the customers. So, tell us about the IDAXA, which is pretty new, and as the chair for International Digital Asset Exchange Association, what is the association's mandate? What are your asks? And if time permits, what are the 3 key challenges maybe faced by your members?
Sure, thanks very much. So my name is Anson. I'm the chair of Access Singapore, which was established in May 2014. So one of the oldest associations around. It's still super active in regulatory space, helping regulators, but at the same time, speaking in the interest of the industry, of the ecosystem in Singapore. Whereas IDAXA was formed when the Financial Action Task Force came up with the AML guidelines back in 2019. And then with all the different recommendations, we saw one particular recommendation really required work. That is what they call Recommendation 16, or in banking terms, it's called the travel rule. So travel rule is very different in our space, and regulators at that time did not understand. So one example is travel rule in the banks is where Bank A shares custom information to Bank B and vice versa for the senders and receivers. And in order to send banks to send internationally, you have to fulfill the rules. Otherwise, SWIFT will not be allowing you to use the network. All right, so in order to use the network to send money internationally, you will need to follow the rules. However, in the crypto space, we have, at the beginning, we've passed that. Sending and receiving crypto doesn't require permission. So by adding rules on top to check for the sender's information, receiver's information, is not easy, because you cannot form a SWIFT, like you can't have a government enforce the system, because money, so-called crypto, is flying everywhere already, so to speak, right? So we've talked to the regulators and FATF. I also went to the Vienna Consultative Conference, held by FATF in 2019. We had a side talk with FedF and said that this is going to be very difficult. You will not see a SWIFT in our ecosystem because it's decentralized. You will not get any single party that can come together to agree to a centralized system, because that will become a whole paradox, because the whole industry is decentralized. So I did warn the regulators that you will see a lot of different systems, and because there's so many different systems, they may not be able to communicate. That may be the problem. So FedF was saying that it's important to have a channel to speak to them. However, all the associations today are very jurisdictional, meaning Malaysia is for Malaysia, Access is for Singapore. Even if we try to speak internationally, no one listens. Like, why would we listen to one country? So IDAXA was formed during the G20 Osaka summit in 2019, where we have a number of associations that band together to form this association to become the voice for the industry. So the first thing we worked on was the travel rule challenge. So IDAXA, cutting a long story short, we were one of the 3 parties, Chamber of Digital Commerce, Global Digital Finance, GDF, and us, formed standards in the messaging system, where if you were to send information between 2 parties, what is that standard? Because once you have that standard, different compliance software solutions that implement the travel rule solution can communicate with each other. Okay, so that was a very big undertaking to connect everybody. And that's where we need everyone to come to the table to make this standard, which we actually did. And FedF has acknowledged in the reports, if you saw, that standards were made by the industry. And I'm pretty sure they're referring to this particular one, because this really required the whole world to come together. So IDAXA was formed with that, and we're still working on that. But now the tables have turned, where regulators have seen that the private sector is so-called behaving, is trying to follow the guidelines, and are prepared to put up the cost for the compliance software. But the regulators came to us and say they are ready, but they are not putting the money to do global compliance. And my answer for them was that it's not the private sector. Private sector has the money, but there's no initiative, because only 7 of the 39 FATF members are so-called complying, even largely compliant, not even fully compliant. Now, if you have only 7 countries complying, like Singapore, Switzerland, a bit of US, a bit of Japan, then they don't have the incentive to really comply globally, because the cost is high. And recently there was a report that just came out saying that it's starting not to make sense because the compliance cost is now really taking over the business cost. So this is where IDAXA is the platform to communicate with the regulators. And what we're seeing, like you said, what are our asks? Three main ones I can still link to that. One is, don't do knee-jerk reactions to regulation. Really need to communicate with the ecosystem. I know with the FATF, because we speak to them very frequently, I had some reservation on what they're working on with the stablecoins, because the assumption for stablecoins today is that it links to fiat. But global stablecoins is supposed to be stable to a particular asset. So for example, if you link to gold, do you consider that as a stablecoin? You link to a real-world asset, do you consider that as a stablecoin? If non-stable coin would just be something like Bitcoin, free floating, right? So the definition is still not clear. And this is why the whole world is working in different ways on how to deal with stable coins. And furthermore, US is working on the definition of stable coins, but they are focusing on asset-backed stable coins like USDT, USDC, and so on. There are many non-asset-backed algorithmic stable coins that are doing very well in the ecosystem. So if you do one and not the other, just like what happened in 2019, we had a lot of centralized volume going towards a decentralized ecosystem. We will have a lot of centralized stable coins flowing from there to the decentralized stable coins. Okay, we're going to have that, and then you're going to run another consultation on the stable coins again. It's going to be a lot of work. So we ask is really engage locally with your ecosystem. Like MAS, I really love what they're doing. Even WhatsApp, they get to the ground to see what's happening. I think every central bank and regulator should do that. Okay, and second, the private sector has already done their part to comply, ready to deploy capital, change all the KYC, AML, and having the travel rule processes ready. But we need the FATF members to comply. Okay, so including the likes of many, like Saudi Arabia. I know Malaysia's not fully, which is fine because everyone's at a different pace. But need to push, which is said at they mentioned in the report. And the third is stablecoins is a big issue and must understand the ecosystem better than just thinking on one particular asset, which is the fiat currency.
Thank you, Anson. Let's do a quick round, tying this back to the title of this panel. So crypto versus fiat. Is it convergence or parallel? Let's start with Anthony. Short one.
Yes, I would say that the end result would be, let me not say that. I would say that my answer to that would be convergence. I would say convergence between the two. In the end, we don't know how this will play out. We have the emergence of many more stablecoins, the CBDCs, and then of course you have the Bitcoins and the Ethereums that are extremely volatile. In the end, you have investors that are interested. Everyone has an appetite, or has a different appetite. How do you satisfy that appetite? How are you able to accommodate that free flow of fiat for customers, that they're able to purchase digital assets? How do you create a network that anyone in the digital asset space is able to convert back to fiat? Customers, investors, they change their mind every day. So we, again, really aim to just serve as that bridge. So once they're ready to cross it, Fintech Bank is essentially there that can accommodate them.
That's good. It's like cover both ends. Very good. All right, Pooja, what do you think?
So I'm going to speak from a regulatory perspective, just to be different. I would think should be converging, but it's really somewhat parallel at the moment, which just obviously makes the landscape even more confusing. But I think there's just way too much regulatory uncertainty now, which has to do, I think, with regulators some regulators being a bit slow to move at the times, and also this industry's growth just outpacing every known expectations. So the law has always kind of trailed behind technology, but I think in this case the gap is just huge. So it'll be a while till we reach the same destination through different means.
Yes. Okay, that's great. Anson, what do you think?
I paid my dues talking to multiple regulators, so I think I will say the real truth. At this point in time, I unfortunately would say we are diverging. The biggest reason is because the ecosystem is seeing how, I won't call it hostile, we're near there, we're just still quite warm, but to the point where when regulators are not listening, new innovation comes up. So for example, stablecoins came about because the banks, back then in the 2014-15 era, no one was opening for crypto companies, right? And therefore, lots of stablecoins came up to solve the stableness issue, right, for the different cryptos. And now, with having the stablecoins issue in discussion, we need to see what they come up with. There is an early paper already on stablecoins by the FATF and the IMF as well. I think World Bank also, not World Bank, another government agency also has one. But we have another problem coming up where a lot of decentralized finance bridges allowing the different cryptos to jump from one chain to another in a very, very easy manner. So it's good for the ecosystem, but we need regulators to have continuous engagement and not be fearful to talk to us. So right now, diverging, but I'm hoping for convergence. Great.
So should I buy Dogecoin?
Oh, except that.
Great, this is brilliant. So we do hope that 2022 will see the world in a better place. Anthony, Pooja, and Anson, always a pleasure to speak to you. Many thanks for joining us at Code Asia 2021. Appreciate your thoughts and your insights. And thank you to the organizer for having us here today.
Thank you so much.
Thank you. Thank you so much.